Yeah, well, what I'd like to do, folks, there has been a lot of buzz around Corsair
Gaming.
and I can't ignore it now, Paul. We've gotten too many questions in our Patreon. Of course, guys, make sure you are fondling that thumbs up. And patrons, we know we love you. We're going to look at Corsair right now.
I don't think we have enough data on Corsair, but we're still going to look at it.
Isn't it pretty new?
Yeah, it's a pretty new company.
Yeah, they went public on September 25th of 2020.
Corsair is in the business of providing high-performance gear for gamers and content creators.
So it's kind of like Turtle Beach in the sense of they make
mice, headsets, power supplies, gaming computers.
Gaming chairs.
We've talked about this in the past. Obviously, gaming is huge.
They make mouse pads?
You see, Paul, that's how they're going to corner the market. Let's look at Corsair.
Mouse pads are back.
The ticker symbol is CRSR, Corsair Gaming. Paul, let's get after this a bit.
Now, remember, we like to look at companies with a longer history than Corsair has. They just went public. So what we can do, though, is we will look at the end of this, we'll look at the stock analyzer tool, make some assumptions, and then determine what we'd pay for the company going forward.
This is not a sexy pick, folks, in terms of, I know we want to follow the hype of Robinhood IPOs, Coinbase IPOs, and get on this hype train. But for value investors, and if you read more about some of the most famous guys out there, they let these companies mature into a company, then decide to buy. So we usually stay off some of these newer companies, but we can certainly analyze our thoughts on this moving forward, Paul. So let's get after Corsair. What is the market cap using that beautiful Everything Money software behind you?
Market cap is $2.6 billion. PE of 17.86. I don't know why it's showing no profit margin because it should have a profit margin. Net income of 148, which is about, what is that, 7%? No, 6%, roughly. Oh no, revenue here is 192. It's still about 8%, whatever it is. The bottom line is it's an X. So a check in an X, no dividend. Free cash flow last year of $181 million. High return on assets, not enough data to show me a 5-year return, but that's where it is right now. Now, something that Mo talks about, a power stock. This stock is all below all of its moving day averages right here. Yep. This means there's a lot of negative momentum in the company. Granted, 300-day, 200-day probably don't exist because of the time it's been around.
They just got to the 200-day.
Okay, so we're looking at these ones. It's still below there. So let's proceed on.
Paul, when you're, say for example, I don't want to jump the gun too much, but say if you're in love with a company and then Mo's charts, like Alibaba, say that this thing could fall even more, would you wait or just dollar cost average in?
So as a value play, I would just dollar. If most charts tell me there's a downward trend,
yes,
I might not buy as much as I would had he said, hey, there's an uptrend. I might just wait and sell puts on it.
Or head over to the income statement. We want to look at the income over the last couple of years, Paul.
So let me see if we're getting a data feed. Here, yeah, same thing. So I'm going to go to, see, the thing is, if you look here, the data feed isn't the best. They're skipping quarters even on Y charts. So it's not just, it's the data from Morningstar. So our data here is the same. It's hard to get this data because it's a new company. So I want to compare quarters to quarters. So December 2020, they did 556. December of 19, they did 326. So there's clearly growth in the company. Clearly there's growth. They did 1.7 billion or so last year, 1.9 billion, whatever the number is. Net income, here's something unique. Profit every quarter. Every single quarter is profit and growing. So the question to ask yourself as an investor is, what's going on with the future of gaming things? You know what I mean? Are people going to be really doing a lot more money on their gaming situation? I don't know. I just saw the other day this thing called Backbone or something like that. You attach it to your phone and it gives you an Xbox, which looks pretty cool to me. Obviously, the gaming world, gamers are different. They want their whole setup. They want it to look cool. I'm sure if you Google it, esports is becoming
huge. I mean,
huge. I think Kentucky has an esports team or something like that. University of Kentucky.
I think people like our generation who grew up on video games are obviously having kids, and I have a totally different thought process about video games. I played a ton of them when I was a kid, Paul. I got all A's, played sports, I went outside, but I think it's more accepted nowadays that you can play video games, and that's perfectly fine. You're not a nerd, or you're not,
Yeah, they're like building an arena for it in Texas.
It's crazy.
Did you see this arena?
It's amazing. God, yeah. Okay, Paul, let's keep going. What about profit over the last...
So one of our fans here is saying one of his brother's friends makes multiple six figures playing video games.
Wow.
I mean, it's a career. Shares outstanding. It's an X, but it's pretty much the same from a few years ago. So it's up slightly by 0.1 million, 100,000 shares. This is the hard part about doing new companies, but balance sheet, 711 million versus 499. Check mark there.
Free cash?
Cash flow statement. Let's go by 4 quarters at a time. 181 million in the last year. So 181, not enough data as you can tell here. 181 million times 20 equals 3.6 billion.
Yeah, the market cap is 2.6.
So it's a check. Now here's what I'll say, guys. I would never make a decision just based on the data I see here because there's not enough data going backwards, and I don't know the future of gaming. This is where the next research comes in. When people say to me, Paul, what do I do after the 8 pillars? Go do more research. It's not like Microsoft that has just or Apple that has just such a stable of people sitting there doing everything month in, month out. This is a new company that's gone public. It's in a very niche field. You know, we've analyzed Turtle Beach before,
yes,
which is kind of the same area. So please make sure you find out what you think the future of this company can do.
Mo, are people trading this company, Corsair, in the bid and ask nation?
Yeah, there's a lot of people doing that. Now, the big thing, I mean, you could just see this consolidation that it's had. Why is this not working? Okay, that consolidation that it's had over the last, couple of months. But let's go look at the daily chart. This is way more important. So they just hit, like Paul was saying, they just hit their 200-day moving average here. This is where they became a 200-day-old stock. And right now, they're under all 4 of those major moving averages. So the trend is for sure down. They've been down since June, and they've just been coasting on the bottom. This is one of those where I think you just keep it on your watch list and let it turn up and let it get some volume, let it go through these moving averages, and eventually this thing may be something. But right now, I just don't think that you should be playing with this. No, the volume's fine on it. But just take it easy on this thing.
Paul, let's get back to the stock analyzer tool. You can get it being one of our patrons. This is in everythingmoney.com. Go ahead, Paul.
So this stock analyzer tool we use to analyze our companies going forward. I did a 5-year analysis. Now, the reason this is good for this company is if you've done your research, you can make assumptions based on growth rates and profit margin. You can get an idea of what the company needs to do in order to justify a certain price. So I made low assumptions and high assumptions of revenue growth, 5 and 10%. I assumed issuing shares, taking shares away, profit margin, 6 to 10%, free cash flow margin, same thing, PE, 12 to 18. Hit my returns, hit my analyze button. Guys, it's actually maybe not terrible. If you think my middle assumptions are reasonable, it's probably a buy right now. It's currently at 29 bucks and it's selling for 30. It's currently $29 and the middle assumption says $30 a share. Now, would you take this as this is gold, go do it? No. This is part of the process of learning. Do you think they're going to grow at 10% a year for the next 5 years?
I know this is short term, Paul, but this stock was $46 in February, and it still seems like they're making money on a quarterly basis. What happened? Where has the hype?
Listen, momentum shifts. People got to remember the momentum will. Here's what you're going to see. Every company has good and bad attributes to it. It depends on what the momentum is doing, and that's the reports you see. That's the news you see out there. So if things start to go south, you're going to see all the things. Keep note of this. All the hype companies right now, when they finally do go down, the news that they're saying about those companies, I bet you if you Google and research that news, it's been going on for years. It just became what was relevant right then and there to justify the downward trend. Because look at Tesla. Tesla just crushed earnings, but it's down from 900 to 630. So maybe it's more like, hey, the stock is down. We need to do way better than this to even justify going higher. That's what happens with hype stocks and any sort of stock. Momentum will shift greatly. Alibaba, 310 just 6 months ago. Now it's 180. Why? Their numbers are better. Why is it down from 310 to 180? Mood shifts. What your job as an investor is to do is to learn how to sit there and remove all the noise and say, what is actually going on here? On this company right here, Corsair, if you believe that they're going to keep shares the same, grow 10% a year of revenue, have an 8% profit margin, 8% free cash flow, and sell for 15 times multiple, you can make 12.5% buying it today at this price. These are not crazy assumptions. The question is, are they likely to happen? That's what you need to ask yourself. But based on this, it might not be a terrible company to own.
Most what were you going to say over there?
This goes back to that video that you sent when Amazon went from, close to $100 to $6, Paul?
What was that?
When Amazon, what were
they? Oh,
they?
yeah, when Amazon in 2001, 2002 went from $113 a share down to $6.
And Jeff Bezos did a video after, and they said, what were you thinking during that? And he said, well, we just kept seeing the stock price falling, but everything on the internal side it was just Amazon was growing and growing and growing. So stock price doesn't always reflect company. That's just what it is. And this is a perfect example of that. Maybe stock price here doesn't reflect company. And eventually it will. It will.
Over the short run, a stock is a voting machine.
Yes,
Over a long run, it's a weighing machine.
And also remember, when you get companies like this that came on, this was the next big thing. You saw it on the cover of everywhere. Everybody was in this. That's just a very big influx of volume and people just going into that stock. Eventually, the hype dies out and people just move out of it and it just becomes kind of boring. And if there's not a lot of volume and they're pushing it up and people are ignoring it, that's what's going to happen to it. Eventually, if the company fundamentals stay where they are, the company will progress in stock price.
That is our take on Corsair. We appreciate you guys watching, as always, and our dear patrons.